Hi, Tim Biggam for Delta Derivatives, Option Hedges and Edges, in a cold Chicago and taking a look at a market that's finally cooling off here as we have some growth cut forecasts coming out of the IMF. We have China trade talks all but stalling here. So we'll have to wait and see how earnings do. We've seen a big earnings revision down in the last few weeks, yet the market ripped higher. That means that multiple expansion may have reached a crescendo here, and someone in UPRO agreeing with that philosophy. They've been buying out of the money February 22nd expiration puts. UPRO is a triple levered S&P 500 ETF, so they're taking a bearish stance here, maybe doing some fund protection, maybe just making a trade. Regardless, they skewed that implied volatility on those Feb 22nd expiration puts up high. I'm jumping in, capturing that vol, hedging by buying the May 1st, the following week, same strike puts here, doing a simple put calendar spread trade here, just looking for a pullback somewhere along the way here on the S&P 500. We may break that 2600 level that was kind of the ceiling to the upside, rip through here. If we break through there again, I think we could see a quick exit by a lot of these short-term momentum guys. Certainly momentum has carried the market this far. We'll see if it has enough to get it going again here. But I think given the fact that a lot of the tailwinds, such as we alluded to that China talk, certainly the PE multiples no longer that reasonable anymore. Price to sales again poking towards that $2 level. We've had the best start to the S&P 500 in about 80 years here. We're up big already, so I think a pullback may be in order. So I'm a little cautious here, certainly cautious on a stock like Tesla, which broke that 300 level once again, made a run not too long ago towards those all-time highs, but has just kind of given up the ghost here. I think given the fact they're cutting Model 3 prices, the margins certainly will feel that. Production quality and production itself still a big-time headache. Also looking at big competition out of BMW and the likes, Porsche as well. And let's not forget, perhaps most importantly, those electric vehicle credits have run out basically for Tesla here, where the other big manufacturers still have those big credits, which is a big selling point here to use. So I think Tesla at a big disadvantage. Finally made money last quarter. A lot of that pulling forward demand simply because anyone who bought last year got a bigger tax credit this year, much less. So I think certainly sales were brought forward here. I think going forward, Tesla will be hard pressed to make money, and eventually the company will have to make money to survive. So until next time, as always, here's a good trading. Take care.